What is going on, guys? Welcome to the video. First of all, I just want to say thank you for 1,000 subscribers. It's actually kind of crazy. I'm probably going to title it 1,000 subs because I appreciate every single one of y'all who tune in, who tap in with these videos. 1,000 subs, it might not seem like a lot to some people, but it's more than I personally ever thought that I would get. And it truly means a lot to me, just to think that there's 1,000 people out there who have followed me on YouTube, who find some sort of value out of my content. It's just crazy, and I just want to say thank you. I also posted a little thank you on Twitter. If you don't follow me on Twitter, go ahead and follow me. The link will be in the description. I said a little thank you for 1,000 subs. Also, I've been posting before, like last night, I've been posting what I want to see from the markets. We had this higher time frame market maker buy model that looked good last night before going to sleep. So I've been posting a little bit of bias on there, so a little bit of extra sauce if you do follow me on Twitter. But regardless, man, I appreciate all the support, and I took 2 wins today. I don't usually take 2 trades, but we'll go over what I saw in the market today. If you go look at my Twitter from last night, I posted that I wanted to be bullish to this 4-hour high. This looked like a nice market maker buy model in the higher time frames. We've come down and swept liquidity. So now if we go to the 4-hour chart on NQ, we can see that pre-market we came all the way up and almost took this high within the 4-hour for value gap. Obviously, I'm bullish on the higher time frames. We have just continued to hold bullish structure. Nothing has changed. This weekly draw on liquidity is still my high time frame draw that I eventually want to see get hit. So yesterday we had a bunch of crazy market movements with FOMC, and we ended up coming back down into this 4-hour for value gap and sweeping this liquidity and then getting this huge displacement higher. So we opened up, the market open around, we had already come up and almost taken this high here on NQ. Same thing on ES. And we started to come back down and respect and displace lower pre-market and once the market opened. So after this, I was originally zoomed into this 1-hour for value gap looking for bullish reactions out of here, but we can see market open and we just never got any sort of bullish price action there. And so once we run through that first 1-hour for value gap and we continue to hold bearish structure, I take out equilibrium. This is the blue line here marked. If we go to ES actually did touch equilibrium. So that was my confluence of where I wanted to see the market fully retrace to, was potentially equilibrium right here. And then, so let's go over the second trade was more textbook. You could say expansion or continuation model, because we had this continued sell-off. So if we go, it was out of this 15-minute bearish imbalance. It was a short trade right here, but the first trade that I took was a retracement to this 15-minute imbalance. So we had come down, and we had come down to this 1-hour for value gap. ES had made it down to this lower 1-hour for value gap. So we technically did have an SMT for the moment here. Boom. We had NQ is showing, was holding up stronger. If we go to ES came down into this for value gap right here. So we had that going for us. And then scaling into the 1-minute chart. And like I said, I've had a lot of questions. Why am I taking a retracement based off of a 1-minute out of a 1-hour for value gap? Well, my retracement for this is I'm targeting a 15-minute. I'm targeting this 15-minute bearish imbalance. And with the retracement model, it's not like your typical expansion model where the bias is, let's say the bias is bullish and we're tapping into a higher time frame imbalance. We've already came up here, we're tapping in here, we want to see that internal model. No, this isn't, that's an expansion model if the higher time frames are bullish. This is continuation. Right now, the 15-minute, which is our higher time frame in this scenario, is selling off, right? And I want to see this retracement back to this 15-minute imbalance. If if we go to the 1 minute chart, we had this SMT down here. Let's see. Yeah, we had this SMT, and we got this inverse for value gap. And once again, I also want to say this is a lower probability trade, okay? Because it is a retracement, and it comes with, I would say these retracement models comes with more market experience to where you can actually start to see these things. But this was the trade that I took. We can see we bought here, sold here because we had an SMT at the high with ES. ES came up and fully rebalanced to this 15-minute for value gap. But at this point in time, I'm sitting here, I'm watching the market, I'm like, okay, if we get this kind of reaction right here, this is the only higher time frame imbalance within the range. If we're getting these bullish reactions, this is telling me that price is going to come up and rebalance to this 15-minute for value gap. That's just what I'm thinking in the moment. And so I took a trade right here. We closed. We have this SMT right here with ES. We have an inverse for value gap and a change in the state of delivery. I entered right here. Stops were below right here. I entered on the pullback to the CISD, and then the main target was this high and this 15-minute for value gap. And I took profits right here because on this candle, ES came up and took these highs and had already rebalanced to the 15-minute for value gap. And since it is a retracement model, yes, you can move stops to break even, but since it is a retracement model, I'm very quick to take profits on these. So if there's an SMT that's formed, I'm taking full profits on a retracement. And as you can see, it played out. It was honestly about a 1-to-1, 1.2 RR trade, nothing crazy. But we did see that retracement. If we just go to ES, we did see this retracement to this 15-minute for value gap. But once we got to this 15-minute for value gap, this is where the true, I would say, textbook entry happens. Is we're holding bearish structure. In order for me to be bullish right now, yes, the higher time frames are bullish. We've already established the fact that we're in this higher time frame model, and I want to see this 4-hour buy side get taken. We've also formed relative equal highs up here. ES is now, So we have that higher time frame bias. What do I need to see in order to target this high now? I need to see, in my opinion, this 15-minute imbalance get ran through for me to actually be confident in taking longs here, because there's not a ton of structure. This is kind of just a straight move down. And because of that, you can also see that we're getting a displacement and close above this 5-minute internal swing high, so that could also be valid too. But I do want to see the market close above this 15-minute bearish imbalance. So that's my thinking. And we've already retraced to this area of confluence, but if we start to get bearish reactions out of it, that's just telling me that price is likely to continue lower, and extra confluence was equilibrium for NQ. So we came up, price has been bearish, right? I don't know how, price has been bearish all morning. I don't know how far down we're going to come and retrace to before getting this move that we're getting right now. But what tells me, this 15-minute for value gap is going to tell me what the market wants to do. That's basically what I'm trying to get across. This 15-minute, how price reacts in the lower time frames to this 15-minute is going to tell me whether or not I can take a short here, or whether or not we're going to blow past it and I can wait for a pullback to a bullish for value gap and continue higher. We come up, we put in an SMT at the highs. Once again, SMT is essential for this change in the state of delivery entry. And holy crap, Bitcoin is at 100K. Are we back? ETH is up 11%. Are we back, boys? We have the manipulation at the highs, and this reaction tells me, okay, we're gonna respect this 15-minute and continue lower, and continue with this bearish order flow and continue to rebalance. So we have that SMT, we have the inverse for value gap, we have the change in the state of delivery right here. Boom, boom. And that's all you need. That's all you need. I continue to say, you don't have to take a retracement model here. Like I said, retracement models are lower probability. Guess what? You follow the higher time frame structure. On the higher time frames, right, on the 4-hour chart, we're rebalancing to these hourly imbalances into equilibrium. Okay, Zooming in, we have a bearish imbalance here. Are we going to respect it? If we respect it, boom. Okay, we're cool. We know we're rebalancing on the higher time frames. And we're simply taking the internal model because we don't know how far we're going to rebalance to. This is what we know we can get with this type of reaction. Boom. I hope that makes sense. Nevertheless, this is the change in the state inverse and SMT entry model right here. And I actually got filled. It was about a 1.5 R for me. The elite entry would have been right here. Change in the state, pull back to this bearish fair value gap. Right here, the 1 minute. We eventually came back up and turtle souped this. And after we turtle souped this, right here, we just absolutely dumped. Notice this is also within the 1050 to 1110 macro. What can we expect within that time frame? A volatile move towards the pre-existing Jalt liquidity, which in this scenario is this 15-minute sell-side liquidity right here. So we can see that macro opens up. We come and manipulate the high within this fair value gap, and then we absolutely dump and get the move that we wanted to see. But I did get filled around somewhere around right here is where I got filled. So it was about a 1.5 RR for me. And yeah, the elite entry would have been a 2-to-1, 1-to-2 RR trade. But this is it. This is it. So those are the 2 trades that I took today. I don't normally like taking 2 trades. The only reason that I stayed on the charts was because this wasn't this was essentially a break even, right? It wasn't a lot of profit. If I had seen the move, if we had come all the way up and taken this, like if we had gotten the big move that I wanted to see off of this retracement, then I would have logged off the charts. But this move is what caused the manipulation, and I saw that. I was like, okay, so we got the rebalance, and now we're going to probably continue lower with this SMT inverse CISD. Keep it simple, stupid. This is all you need. And right now we're getting this push back up for the eventual move that I called out on Twitter, like I said, that I wanted to see this buy side get taken on the higher time frames. Now we have the confidence, right? Look at this. We've rebalanced to equilibrium on ES, okay? Essentially on NQ as well. Higher time frame imbalances we've rebalanced to. 1 hour imbalance, zooming into the 5-minute chart, huge 5-minute displacement. We've had the internal sweep on liquidity as well. We've also ran through the last remaining higher time frame imbalance within the range, right here. This is a great opportunity to be going long. I've already taken my trades today. I'm off the charts. It's also later into market open. But now we have the confidence with this move. Now we have the confidence to target this buy side liquidity. I hope that makes sense, guys. So right now, what could you do? You can measure out equilibrium of this right here. Wait for a pullback into one of these imbalances, potentially to equilibrium. You don't even have to wait for that. We've had this now turns into a 5-minute model. Oh my gosh, please. I'm trying to, let me just clear this one up for you guys. Come on, man. Why do the markets move? Rebalance to inefficiencies and equilibrium. Check, check. Hunt liquidity. Internal sweep on liquidity. We've now displaced higher. Boom. 5-minute imbalance. This turns into your market maker buy model. You can wait for, if we get bullish reactions here on this 5-minute, you can enter here. What would I be looking for? That 1-minute entry model, inverse for value gap. Nothing has opened up yet. You can also wait and see potential move back down to equilibrium and see what kind of structure starts to form here. This is how the markets move. Like I said, we now have the confirmation of the move higher. We've ran through all the higher time frame imbalances within the range, and we've displaced higher above a significant swing high with the properly correlated time frames. 1 hour to 5-minute. 5-minute zooming in to the 1-minute chart. It's simple. Keep it simple. Yeah, that's the market recap. That's the trade recap for today. Once again, guys, thank you so much for 1,000 subscribers. It truly means a lot. I'm going to keep pushing and keep pumping out content for you guys and provide as much free value as possible. So thank you. Let me know if y'all are able to execute and take a trade today. I appreciate you watching. I'll see you on the next one. Peace.